Just hours ago, the Federal Reserve approved the largest interest rate increase in nearly 3 decades. We thank you for joining us tonight at 5. I'm Rolly Hoyt. The hike comes as the inflation rate nears 9%. THV 11's Frederick Price reports on how this will affect you.
This interest rate hike, of course, is supposed to combat soaring inflation. But experts say if you're in the market to make a big purchase like buying a house or a car, there are some things you want to think about. In an announcement made Wednesday, the Federal Reserve is raising interest rates by 3/4 of a percentage point.
High inflation imposes significant hardship, especially on those least able to meet the higher costs of essentials like food, housing, and transportation.
Ideally, the Federal Reserve aims for an inflation rate of around 2%, but over the past several months, we far exceeded that rate.
With the Federal Reserve raising interest rates, that is their primary tool to try to bring the rate of inflation down.
So how does this affect you? Let's say you're paying a mortgage or a loan on a car.
These rates are going to be going up as the Federal Reserve raises the interest rates that banks charge each other.
Jeremy Horpedahl, professor of economics at UCA, says the feds will likely continue to raise those rates. His recommendation for anyone looking to borrow money, do it now.
There's increasing urgency that if you need to make those types of loans or borrow that money, now is going to be a good time to do it.
He also says it could have an impact on spending around the country.
Consumer spending as well as businesses borrowing money to invest are two things which could be slowed down by rising interest rates.
This latest interest rate hike, Horpedahl says, could also affect those gearing up for retirement.
They are trying to figure out, what do things cost? And how much money am I going to be able to pull out once I retire?
As the feds try to slow down the price of goods and, everything else that is steadily rising, Horpedahl adds people should find ways to save.
You think about how large of an emergency fund you need. Maybe that needs to be a little bigger now because the chance of a recession is going up.
In Little Rock, Frederick Price, THV 11 News.
Frederick, thank you. And something to keep in mind that the professor said there, the main way the Fed can get inflation down is with these rising interest rates. The downside, if they rise too quickly, that could cause a recession. And that worry is why Wall Street had a roller coaster day. Rising interest rates often scare investors, but the aggressive move reassured the stock markets. The broad S&P 500 went up 1.5%, the Dow went up higher by 1%, and the Nasdaq gained 2.5% today. Let's check in on with gas prices around the state of Arkansas. Little Rock's average at $4.46, Pine Bluff $4.53, and Hot Springs also at $4.46. These numbers are slightly down from yesterday, but overall up from just a week ago. Gas prices, of course, depend on factors far from America's borders. So what really goes into the price that you pay at the pump? According to AAA, taxes, distribution, marketing, and refining are all key factors. But roughly 2/3 of what you pay is based on the price of crude oil. American oil companies lead the world in crude oil production, but we still consume far more than we make, and we don't use a lot of what we produce here. We rely a lot on Saudi Arabia. That country's second behind us, with Russia a very close third. So the bad news, as long as the war in Ukraine rages, prices will likely continue to rise.